All right. Hey,
What's
hey,
going on?
hey.
Hey Patricia, hey Lane, how are you guys doing?
You're good. How are
We're
you?
good. We're doing pretty good. How's it?
Awesome. I mean, look how every week, I feel like I can just do time shot and see my hair getting longer. Yes.
We're gonna have to do something about this here soon, or I don't know, maybe wear a cap or something. But
That's funny. Well, I was telling my wife Darinka, I think I'm just gonna grow the mullet out. I think I could actually do it and get away with it.
yeah.
Hey, there's never been a better time than right
The
now.
mullet's gonna make a comeback back. Sure.
It is. It for sure is. Well, how
Yeah,
are you guys doing?
we're doing great, and I think the numbers are. It looks like initially that they at least plateaued a little bit. So I think maybe there's a little bit less fear, a little bit less uncertainty out there, and I think
Yeah.
maybe you're starting to see people see the light at the end of the tunnel.
Well, right. There's light at the end of the tunnel. Obviously from the health side, I think that the curve is beginning to flatten, right? So it's showing that we're hopefully getting close to coming out on the other side. And I think people are figuring out, life as we know it doesn't have to stop. It's just going to look a little different. And so just be smart. Practice social distancing. And just be responsible and safe. It's not like anyone's saying that, let's go rush into a packed stadium anytime soon, right? I mean, this is just, take your time, go a little bit slower, and hopefully we can get this economy kind of moving back in the right direction.
Yeah, I think we're a lot closer to it than we realize, or than a lot of people realize. And so I think there was an initial panic and then some fear, and we saw things, do some drops in the market, which is expected. It's expected. People
Right.
can't get out and function normally as they would be, and that includes, looking at properties and things like that. While it can still be done, there's just a lot of things, like you said, being done differently. And so we saw things sharply drop, and I think that we're going to see it just as quickly go back up. But over the last couple of weeks, we've kind of hit a plateau, like Lane said. And so that sharp dropping off isn't happening anymore. We're consistently, week after week, seeing about 800 new listings in, the San Antonio MLS each
Wow.
week. Yeah, and still seeing 200 to 300, somewhere in there, new contracts come in, and around 500 closings a week. And that's been for the last couple of weeks consecutively. So,
Well, whenever you're trying to kind of analyze these kind of numbers and something this big, you kind of go through the anticipation, the expectation, and the results. And I think, when you look at something that's just never been seen before, I think the results and what we anticipated is kind of in line with with that, just considering.
Yeah. Well, for sure, I have my hypotheses, right? My crystal ball, and I wrote these numbers down just because I thought they were pretty interesting. So this is from the National Association of Realtors, and so this is nationwide data, and this is the numbers from March. So in the U.S., the number of homes sold in March fell 9% month over month. New listings decreased by 10%. And nationwide median home prices in March was $280,600. So, I look at that number, and, I anticipate, your April numbers, obviously you'll see a bigger drop off, but that's not the end of the world when I see that data. I think, and of course, this is just my own hypotheses, right? But I think there's people that are out there thinking that I just got to wait a little while longer, and those prices are going to drop, and I'm going to be able to jump in. But I'm like, okay, well, the only way I really think that prices are going to drop is if you get a flood of a giant flood of inventory out there in the marketplace, and I just don't see that happening. What are y'all seeing on the real estate side?
it's a lot for that to happen, just because, we keep reminding people week after week, even though it's hard to not jump immediately to thinking we're in some sort of housing crisis, because people do equate that when they, see an economic crisis. And so we basically, we have a health crisis that has then flowed
Spilled
into
over to
an
an
economic crisis, and a lot of people are thinking housing crisis, and we're not in a housing crisis,
Right.
and you don't typically see prices drop unless you are flooded with inventory, and we aren't there. So still, if you look at a supply and demand, where we are, we're still technically in a seller's market. We still have less supply than there is demand. So
Absolutely.
Well, yeah, boy, and it seems like, again, in my opinion, every week that the shelter in place, social distancing orders go on, the more pent up demand is going to be. My story, and I'm sticking to it, is that if I've got a shelter in place, I'd rather do it in my own backyard with a swimming pool than be stuck in a 600 square foot apartment.
yeah.
So I believe that there's going to be a huge amount of demand that comes out on the other side of this, more than there already is. We had a record March as a company. April's going to be bigger than that, and we're still taking loan apps every single day. So people are out there still want to buy a house.
Well, I think too, a house is not just a financial investment. It provides a utility. It's kind of like I was saying earlier in our meeting. It's kind of like toilet paper in that, it actually performs a function. And I think now probably more than ever, people are very aware of if their home is performing that utility or not. So they're very aware of their housing needs.
Yeah, people are, without a doubt, obviously, because they're required to, but also, just even out of the fact that you don't want to go out and be around as much stuff right now. They're realizing their surroundings more, and they're a lot more aware of the things they like, the things they don't like. That's why we see lines outside Home Depot right now, because people are trying to, fix up some stuff in their house. That's why we see more than I've ever seen an influx in people wanting to put swimming pools in their backyards, like you just talked about. Because we're Tuesday right now, and the last couple days we're over, just over 90 degrees. They're telling us on Friday it's going to be 100 degrees here in San Antonio, and we're in April. So
you can't take a vacation.
Yeah, and you can't go take a vacation.
Well, I'm not going to lie. I've been getting in our pool literally every single day. For the last couple of weeks with my little girl when I get home from work. My wife loves it because it's a nice little break too for her, right? So yes, having a pool in the backyard is definitely a plus. But just to kind of get back to the sales, the only way that I think that it's going to be a while before we get a massive drop of inventory into the marketplace. And so I think again, my opinion is the longer that people wait to jump off the fence and to buy a house, the potential that they're going to pay more is going to continue to go up. So it really is still a great time to buy a house. So long as your employment is not too greatly impacted by the COVID-19, and in which case you've got more important things to be taken care of right now.
Right. So where are you seeing rates right now over the last this last week since we talked with you? What have rates been doing? That there in itself is another great question. The best way I can describe the mortgage market and the housing finance market in today's environment is fluid. Whatever I say should be time stamped because it can change tomorrow, or it can change in the next hour, or even in the next minute, right? But for the most part, right now, we are still seeing rates near and at record lows. We've got people that are locking loans in 3% for crying out loud in certain cases. But unfortunately, that not every borrower is the same and can qualify for as low a rate as others. And that's part of what I talked about last week and the week before with the uncertainty in the secondary market for investors coming in to buy mortgage-backed securities, which set interest rates. People that have lower FICO scores, would have a higher risk of default or even request of forbearance, statistically speaking, and therefore there's less appetite for lower credit score consumers. And not to say that borrower is still not going to get a record low rate, because they will. It just might cost them a little bit more up front. In which case, it's we're having to work with our real estate partners
to help structure offers the right way, so that way we can help consumers in the best light possible. But again, that's why I still go back to, for real estate professionals and consumers alike, no matter who you use for your housing finance, just promise me this, that you use somebody that is a local mortgage professional, because they've got a vested interest in your community, but then also more importantly, it's somebody that you could really get to know, that you can hold accountable, that is going to sit down and look at your overall financial profile and determine the best course of action for you. I'm not going to lie. I mean, we've had consumers that have applied for mortgages that, let's just say, from a credit perspective, they're not ready to purchase a house right now. But, by working with a local mortgage professional, it's a good thing for them to be able to work with somebody that's going to hold their hand and put them onto a path for home ownership, rather than just say, oh, sorry, we can't help you, next. So that's my little credit soapbox, if you will. But nonetheless, we are still seeing rates at near or record lows. And so, I don't see anything that is really going to change that or cause rates to go up anytime in the near future. Historically, what makes mortgage rates go up? A better economy, better economic conditions, right? Which, ironically enough, rates go up, but the economy's doing great, so people are spending money more. But in this this current environment, this is going to take a long while for the U.S. economy for its path to correct, and so I think rates are going to be low for quite some time. Yes. So yes, we are definitely telling consumers that if they're looking in the market to buy a house, now's an awesome time to do it. But even on a refinance demand, the number of folks that are coming out that are looking to, I guess let me put it this way: there's better options or alternatives to just doing the forbearance because you want to skip a payment because you heard about it on TV. And that does bring me to another topic I've talked about before, and with the forbearances that are going on, we talked about it last week. Forbearance does not mean forgiveness, right? And unfortunately, again, there's no good, sexy 30-second soundbite to explain how mortgage finance works because it's complicated. Lots of stakeholders, lots of moving parts. But the messaging that's come out in media and even from some of our elected officials is that hey, you can just get a forbearance, you could skip up to 6 months payments. Well, that's not entirely true because for the most part, you're really not skipping them. You're going to pay them back later. And when you do have to pay them back, it could actually put you into a tougher or tighter financial situation than you're currently at, assuming that you're not currently in dire need, i.e. due to job loss or anything of that sort. But that is still having an actual impact on mortgage rates to a certain degree, because even as rates are at record lows, they should be lower, respectively to where they sit with, if you look at the 10-year Treasury yield and where the spread, where the 10-year Treasury yield and mortgage rates are, and mortgage-backed security prices, mortgage rates should be lower. But I think the forbearance question is still reigning in that. So the number of loans in this country that went into forbearance from week to week went from 3.7%, and then the data came out yesterday, 5.95% of all loans are in forbearance, which, just under 6% of how many millions of mortgages are there. And the FHA and VA loan programs, the number of loans that are in forbearance for those products is about 8.25%. So that's a pretty high number. And so again, that kind of goes into why your lower FICO score consumers that are getting FHA or VA mortgages may not or may haven't pay a little bit more because of the appetite for risk in the secondary market. But again, if there are people that want to improve their overall financial situation, then a refinance is a great option for a consumer, because if structured right, then a consumer could potentially not have to make 2 months worth of mortgage payments. They would get their money that they currently deposited into their escrow account from January to today back in a check. And on top of that, refinance should be lowering their monthly payment. So there are other alternatives if people are curious about what a refinance could do. Then again, they should just reach out and talk to a local mortgage professional and go from there.
Well, and if somebody does the forbearance, that can greatly affect their ability to do a refinance down the road, right?
Yes. No, that is very true. So if somebody does go into forbearance today, for example, and let's say that a year from now when they come out of forbearance, but then they want to take advantage of the low market interest rates, they would not be able to refinance right away because the last time go around that we had a large number of consumers going to forbearance, the guidelines stated, they had to wait even in some cases 2 years before they can actually purchase another home or refinance their existing home. So, forbearance, it's designed, it's there for people that truly need it. There's a lot of people that are harmed economically from this COVID-19 crisis, but this shouldn't just be a way for you to, quote unquote, skip a payment because you heard it on TV or Facebook.
Right.
And anecdotally, and this is kind of scary, but I have heard stories of folks being told that, hey, buy a house and don't worry about making a payment for up to 12 months. Well, I'll tell you, if you mention the forbearance word to your originator before you're fixing to close on a loan, then they're probably not going to close on your mortgage loan. Because again, I'm trying to lend you a lot of money, and so I want to make sure that you're going to have the ability to pay it back. So if you're getting furloughed or if you lost your job or anything along those lines, then maybe buying a house is not the right thing for you to do at this time. But there's plenty of folks that are still greatly employed and taking advantage of today's low rates.
Have y'all seen some tightening up? I know it's y'all always do things like verification of employment and things like that just prior to closing. Have you seen that become something that's that y'all are a little bit more cautious about?
Yes, for sure. It really is industry wide. And it's not so much that people are doing more than they did before. We always made sure that people still had a job prior to funding on their mortgage loan, or do a soft credit pull to make sure that there hasn't been any new debts that have gone up. So I haven't really seen that per se from the any tighter than we've been before. But you are seeing some folks out there, and I say some folks, some in the mortgage industry that have actually tightened their credit requirements. I won't say their name, but one of the largest banks in the country came out and said that they're going to require a 700 credit score. Meanwhile, there's plenty of mortgage opportunity for people below that. So, every business is a little bit different. Some people want to take risk, measure risk a little bit different, but again, overall, if you are duly employed, it's not as difficult to buy a house as you would actually think. And just case in point, it's kind of funny because I'm a geek, so I was looking this up, but it's crazy. So just in the last 2 weeks, the Google search for, I think it was country living or rural properties or something like that, was up something like 142%. So more people are figuring out, hey, I could work from home, and I don't want to be that close to my neighbor, so I want to move out into the country. And we're still closing USDA loans and that's a 100% financing program. We're still doing the Texas Veterans Land Board program down to a 620 credit score, and if there's a veteran that has at least a 30% disability right now, then this week's mortgage market rate set by the Texas Veterans Land Board is 2.77%. So, and that's with a 620 credit score. So there's still access to credit for lots of consumers out there. But again, they just need to, every family is a little bit different. I've been doing this for 22 years, and I'm yet to find two consumers in the exact same situation. And so that's why I highly recommend, again, work with a local mortgage professional that's going to look at your overall picture and give you options to what your best, what's best for you and your family. Great example. I actually talked to a consumer just this morning that, get this, you'll appreciate this because you're into swimming pools. This borrower that I actually talked to on the phone basically admitted, she canceled her summer vacation plans. So is now actually looking at adding a pool to her house. So I was like, okay, well, you've got lots of options. We have this program, we have that program, or we could do this, or we could do that. So we're given plenty of options. But yeah, that's just another, I guess, offshoot of how people are getting creative. So even the folks that currently own a home, not looking to buy a new home, they could finance a swimming pool. So we're seeing a demand for that.
An option, right? With both a new mortgage and with a refinance, correct?
Correct. Yeah. So even if somebody wanted to buy a house today, there's a Fannie Mae product to add a swimming pool. Basically buy a house. They could add a swimming pool to it, and then there's other options where you can do a first and a second lien. Bottom line is there are options, and you just got to talk to the consumer. But as a real estate professional or even a pool person, I do have a question for you because that actually makes me think. Okay, so if I'm going to buy a new house, and I'm going with my realtor, let's say that here's my price range that I'm looking for, but I want a pool, but I can't find anything in my price range that has a pool. So what if we go a little bit under? Love the location, love this price range, but now I need the pool. How can I, if I'm a consumer, how can I get an idea of what it would cost to put in a pool? I can handle the financing side. I'm not worried about that. But how can I figure out how much it would cost? How long would it take? Or anything? What would your tips be in that case for that consumer that's looking to buy a house and add a pool?
Option. We have a lot of clients that we've worked with and that our agents and other I have agents reach out to me from all over the place, other brokerages, everything, and they're like, hey, we haven't been able to find the house with the pool that my clients want, but a pool's very, very important to them. So then I tell them, hey, restructure your search to the houses that have the right location, like you said, and the right backyard, that's conducive for a pool. And what's very cool about the way we operate in my family's pool company is we can price out pool options for someone without even going out to the house. So we're able
Really?
Yeah, and not a lot of pool companies can do that. And so there's a lot that typically goes into, coming out, and the time frame of scheduling to get out there, measuring different things like that, then coming back and putting some sort of estimate or bid together. And a lot of times if you're trying to, get an offer in on a house, you don't have that kind of time, so we could take a quick look at the survey, which, the listing agent should be able to provide to the buyer's agent, and take a quick look at the survey, figure out what would fit, discuss with the, potential new homeowner, the buyer, what size, what shapes they like, color, that kind of stuff, and get a written estimate, a written contract price, if you will, that they can already have to know where they end up and something they can provide to their lender, because I know in that situation you guys need that, right, for your appraisal and stuff?
Sure. Yep. Yeah, because on the financing side is say we're doing we'll call it the Fannie Mae home style renovation program where they could buy a house and add in a pool. Well, we order the appraisal subject to adding these plans and specs, so that way when they come up with their value, they're going to take, okay, here's the house plus here's the plans and specs and cost, description of materials for the pool. So yeah, so we would absolutely need that, but that's pretty awesome. So really then, all that you would need, just the survey?
That's pretty much it, just to make sure it would fit, and look at these and things like that. And, everything else can be done after the fact. We can go out and do a yard site visit and things like that afterwards. And if there's changes or adjustments that need to be made in shape or size and things like that, that can be done. But the buyer is able to have, a written contract price for what the project's going to cost them, and move very quickly on that potential house that has a perfect full backyard. So
and right now, no one can take a vacation. So, but even if you could take a vacation, what vacation would potentially put equity into your home? None. So.
Hey,
or
again, or like I said, I don't know if I could put a price tag on the couple of hours of reprieve I'm giving my wife when I get home, and just throwing the kiddo around in the pool for a couple hours every day. So no, that's awesome. That is really that is really cool. I didn't realize that you could make it so easy to get a bid and an idea of what it would cost. Honestly, I would have thought it would have been like, got to get some people out, take pictures, do this, do that. So
with a lot of companies. So that is again, like you said, there's differences in who you work with on stuff like that. So we have put together our process to make it as easy as we can for everyone involved, and in this scenario, it just lends itself to being what works really well if someone is looking to put an offer in our house, and so that it just makes a lot more sense to be able to act quickly.
Right. No, that's awesome. Later this month we're going to be doing that virtual home buyers class. We need to make sure that we have a couple of slides on that. I think that's super important. Speaking of which, you want to tell the folks about our class that we're going to be doing?
Yes. So it is next Wednesday, April 29th. It's at 2 p.m. We are doing a home buyers seminar, and while we would love to be doing it in person with everyone, we're going to be doing this one virtually. So we are going to be going over things like the home buying process, covering things that are slightly different in the buying process right now. I know, are going to be sharing some incredible information about mortgages, and we're going to be helping people get on that path to purchase. We'll have a credit expert on with us as well. And so it's really just going to be, getting people on that path to purchase. And for some people, it's a short path, and they're ready now, and they can quickly act, take advantage of the rates we have right now and the current inventory that is on the market and things like that. And for some people, it's just going to simply be a longer path. And that's always the case. But even if someone's on a longer time frame right now, whether it's, something specific to their life, whether it's something specific to a job, whether it's something, even if they just want to wait and see what's going on, after, we kind of think settle down a bit after this global pandemic that we're all going through, just getting on that path and starting the process to know where you are, and if there's certain things you should or could be doing to increase your buying power, or things like that. It's important, and now there's literally never been a better time to get started on that than right now.
Oh, no question, and kind of going back to the rates and the credit score issue. So it's so crazy, but yeah, the difference, 2 points in your credit score can make the world of difference in what your interest rate that you're going to pay over 30 years is. So consumers and even real estate professionals alike should definitely come in and join us next week for that home buyer class.
Yeah.
No, I really look forward to it. I think I love educating people. So the more advice that we can get out there to put people on a path to home ownership, the better. So let's do it right.
Certainly.
Yeah, and I think one of the biggest things too, like Lane was just saying, we talked about with our agents on our weekly team meeting this morning, was loading the cannon. And right now is the perfect time for us to all be loading our cannon and getting things ready for that pent-up demand.
Battle ready.
Yeah, because when things make a shift to, I'll call it even slightly back to normal, but I don't think we're ever going to have the same normal we had before. It's going to be different.
Right.
But when people decide that are on the fence, who've been, kind of just waiting to see what's going on, that it's their time to get out and do something, we're going to have so much pent-up demand that if you're starting as an agent, if you're starting your process of what you're going to do after COVID, when COVID ends, you're too late. So we had before COVID, we've got during COVID, which is right now, which is when you need to be getting everything ready, loading your cannons, building up your pipeline, so that because when after COVID starts, it literally starts immediately. You know what I mean?
What is it? BC,
Right.
DC,
DC, DC, AC, yes. And if you're trying to make those adjustments, if you haven't been, continuing to market, continuing to nurture your sphere, continuing to be in front of, the people and your potential clients, and being a resource for your community throughout all of this, you're going to be way behind when that pent-up demand comes from, roaring out of the gate and ready to go.
Yeah, it's just keeping ourselves, our agents, our team, and as well as our clients battle ready, whether their time is, right now where they're ready, to sell their home or buy a home, or whether they're going to wait it out a little bit and see how things go. But just making sure that they're ready when the time comes.
No, absolutely.
All right. Well,
all right.
I appreciate you coming on with us again this week.
Absolutely. No, this is fun. It's a great way to get news out there. I just want people to again, talk to, if they're interested about financing, talk to a local mortgage professional. Don't use the big.
You're a huge proponent on local mortgage professional, right? I've picked up on that through.
Yes. So hopefully us, but if not, just make sure they're local. Support your community.
That is important. And look at this. Would you hire a real estate professional, a real estate agent to help you with something who lived in a different city and in a different market and
Hope not.
didn't know what was going on? No, you wouldn't. It is the same thing with your lender. It's important that they're someone you can have great communication with, and someone that can, like you said, have a vested interest in the same community, the same city that they live in. And I think that makes a huge difference.
Right now, you really need someone who can be innovative and creative and really look for different kinds of ways to get the deal done. So,
amen to that.
Yeah, absolutely.
Amen to that.
Okay, so
awesome.
Yeah, next Tuesday, 2 p.m., we will be on here.
Yep.
Wednesday at 2 p.m. is our virtual home buyers seminar, getting you on the path to purchase, whether it's now, in the near future, or a year or two from now. Doesn't matter. It's never too late. I mean, it's always the right time to get started right now. So
that it is for sure.
Why don't you real quick again give your contact information if anyone has any mortgage related questions or concerns or anything they need.
Sure. Best way to reach me, call me or text me, 817-247-4766.
Okay, awesome. And guys, 210-592-4299 connects you with ZNR Realty. We can get you with a local, experienced real estate agent who can help you with home buying, selling, leasing, whatever it is. We're here to help.
Yep,
And
got you
we
covered.
will see you guys soon.
All right, guys.
I love it. Take care, guys.